What's good, everybody? Today is August 21st. We had a super clean short setup that I ended up taking advantage of today. So without further ado, let's just hop straight in, look at what I saw, what I ended up taking, and why I thought it was a super great setup. So without further ado, just go ahead and hop in. All right, boys, a little bit of a sneak peek. Let's just go ahead and start with some top down like we always do. This is going to show us kind of what I came into the day with, my bias and all that kind of stuff, right? So over the last week, throughout the entire week so far, we've just been literally dumping bears, and our first target was within this range, this low in equilibrium of the range. So just gonna quickly draw that out to give you guys an idea. We wanted to see equilibrium, this range get hit, and then from there we wanted to maybe pump the brakes and reevaluate our bias and wait for more price action to build before actually getting enough data to know what the market wants to do next, right? So we hit that draw yesterday, and after we hit it, we kind of pushed a little bit higher, and that was most of the yesterday's move, right, higher after manipulating into it. And then in the overnight session and in the morning pre-market, we ended up kind of revealing that we wanted to be a short bias for the day. And how did I know that, right? I looked and I saw generated liquidity right here, and then I just saw a SMT at the high, and from there, that tells me we're at SMT in the high, in line with our bigger time frame bearish trend. We are looking to see some kind of market maker sell model to the downside, right? So quickly looking, this is our SMT right here. And if you don't know what I'm talking about, market maker sell model, quickly to explain it, this is our structure for a sell model, right? We want to have generated liquidity up to these highs. Then we want to tap into a point, maybe say we're sweeping this high right here, that we want to go ahead and react off of. Want to put in a little bit of a move downwards to fake in early short traders, manipulate them with our manipulation leg, displace through that. Once you see that displacement, then we want to pull back and then go, right? And a lot of times we will see an SMT be put in at this high right here, and that's just great confirmation to show us that this is a market maker style model. And then also a lot of times we'll also see some kind of external SMT put in. So yeah, maybe it was at this high right here, external SMT put in, right? So we have external and internal SMT. That's exactly what we're looking for. We don't have any kind of external SMT here, but we have internal SMT, so it tells us that it is going to most likely be that kind of structure, right? So now, knowing that, I want to go see this low get hunted throughout maybe bigger time frame. So a couple different hourly candles. So within the next couple hourly candles, I want to see this low get hunted, or within the rest of the day, I want to see that low become our target, right? Daily target. So the things that I like to see, if I want to take a short, right? We all know if we want to take a short, we need the market. We're in a bigger time frame bearish trend. We need the market to pull back, right? So where's the market likely to pull back to then allow me to take advantage of it to take a short to the downside, right? So where is this pullback zone going to be within this range that gets created? Let's go find out, right? So we open the market. I'll zoom to the 15-minute time frame. Open the market right here, 9:30. So at this point, what in this range that we've built so far? So looking from the left over, so we have range here to here. What in this range so far is an area in which we can expect to see price pull back to, react off of, and then go? Well, with our range, if we want to see a pullback into a range, we have equilibrium, we have fair value gaps, and then especially in a market maker model, when we open the market in the middle of the model, so we're looking to this low get hunted, we open in the middle right here, I want to see change in the state get pulled back to, right? So change in state delivery was right here. Let's look. Where is the series of up close candles that, series of up close candles that swept liquidity? The final one would be right here, right? So we'd mark change in the state at this level right here, that change in the state delivery. Once we see that get closed through, we now validate ourselves to the downside. So now we would also mark it right here, the same exact candle, even though that didn't sweep liquidity, it was the SMT high, so it's still the manipulation leg. If I'm running through this stuff fast, you guys just have to get a lot of pattern recognition and just time into the market, because people who do understand this, it is literally a second language. They get exactly what I'm saying, right? So I want to see equilibrium get pulled back to. I want to see change in the state get tapped. I want to see maybe this 1 hour for value gap sitting right here get tapped. Maybe looking at the 4 hour, what do we have? We have really nothing, right? So just those three things I want to see get tapped: the 1 hour for value gap, the equilibrium of the range, and the change of the state, right? We also have London high sitting right here, and we have Asia high sitting right here. So we have London and Asian high right here. That is a point which we could want to see get tapped, never end up getting hit, so no problem, right? We also like highs right here, anything like that. So on open, my prediction that I'm not going to just react off of immediately, right? But I'm going to react and see, I'm not going to predict it, right? So I have this prediction, but it's just a loose thing that I'm throwing out there, right? And I'm going to see if it takes hold, if it's something I can react off and trade, right? I'm not just going to go ahead and take a trade based off my prediction. I'm going to wait till the market validates it. I'm not even going to have to predict. I'm just going to simply react to it, right? So looking at the market, what we saw was that push immediately up to that level, right? We see consolidation until 9:45 when we had, I think, PPI, some kind of news hit. We see more consolidation, then an absolute jump right after an SMT on that point, jump to that level. And from there, we see consolidation, right? The biggest pointer for me that was telling me, okay, we're in line with our trend, right? My prediction's playing out, but the biggest thing that told me this is something I want to take a trade off of is watch this. I tell you guys constantly, look at this example right now. If we are in a bigger time frame bearish trade, you're gonna see stuff like this, right? Bearish trend, right? Bigger time frame bearish trend, right? If we zoomed in, it would look something like this. Say now, this is the hourly chart. On the 1 minute chart, it looks something like this, right? We're gonna have fast moves, quick retraces. Every time we get back to that official retrace, it's gonna look something like this. Slow, choppy move to the upside, some kind of turnaround, and then a quick move to the downside. And that's gonna repeat. So it's gonna be fast to the downside and slow back to the upside, right? That's how trends work. That's how high resistance and low resistance liquidity works. If you want a quick explanation on that, go ahead and watch my video. It was a super great explanation on high resistance versus low resistance liquidity and why it can help your trading so much, right? So in this example, when I see the market move low resistantly to the downside, and then I see high resistant move to the upside, that tells me that this is both sides of the market. The market will be low resistant to the downside for now. The market will be high resistant to the upside for now, right? So when I see high resistance to the upside, I can expect to see low resistance to the downside, right? And I want to trade that low resistance. I want to trade that low resistance, not the high resistance move to the upside, right? So I'm simply watching. Where is price looking high resistant? Where's it looking low resistant, right? Here we see consolidation. We see manipulation and distribution, right? We see a little bit of super low resistant move right to these highs. And to me, this is a manipulation, right? This isn't distribution, because right when we get above these highs, we don't displace past them. So this point that we want to see get hit, change in the state equilibrium, and we have this high right here. Second we get above this high, we don't displace past it. If we look at the hourly, or maybe even the 15, 30 minute, right? We just literally tap the level and immediately go below, right? We make a 2 candle rejection and completely push lower, right? So that's showing us that we don't want to displace past the high and run past it. Instead, we want to sweep it. So I'm reacting. I'm just saying we have a manipulation move, and then we have generated liquidity down to this low. Look, there is no imbalance like it's left in this leg that doesn't get tapped back into. And if you just visually use your eyes here, don't overcomplicate things, use your eyes. This is trend line liquidity. This literally just looks like stacked lows, just like this. Boom, boom, boom. Let's look. Boom, boom, boom. Right? That's exactly what we want to see, because when the market then turns around, this is all fuel for the market. This is everything we need to see, because this is fuel, right? So when I see the market put this stuff in and show me that it's ready to go, I'm now looking for a trade to the downside. So this first trade, this first model, right? Don't think you can enter right here and take this all the way down to these lows, because I'll tell you why right now. That is not the model, right? If you look, this doesn't get hit. Why does it not get hit, right? Well, it does eventually. I mean, yeah, you probably would have still been enough to make that trade work. But the thing is that it doesn't get hit because the model that you're trading, when you take this entry, right? So say we get our change in the state, our displacement, whatever we like to get, right? We take this super low R short, which is why I didn't take it. It was only about 1.1 something R. So yeah, 1.21 R. It's not really the best. If we take this short, we are only trading this internal model. So to draw out the market maker model, a little curve so everyone kind of could recognize it. Here you go. This is the market maker buy model, and then the sell model to the left, right? This is the model, right? This right here, taking this entry, does not validate us all the way to these lows, because that's not the model, right? If I want to see something happen here, I need to see this displacement. So now let's zoom out a little bit. 3 minute chart. I want to see change of state maybe on the 3 minute chart, or maybe the 5 minute chart, to then validate us to go ahead and take that low, right? Because you have to understand these models are fractal, right? So the 1 minute model, I want to see that 1 minute model play out, and that's all I want to trade. And then maybe if I want to leave runners for the external draw. So I didn't trade this first one because if we look, the level that I'm confident with is the end of that solo model, that actual model that I'm trading, right? And right there, that was only a 1.18. So I'm not really too confident on that. And maybe if we could have got a pullback into this level, it would have been a fine trade. So, I mean, if you want to take that, no problem. You wouldn't have gotten tapped anyways, so no big reason to overanalyze, right? So from there, we tap back into this 15-minute fair value gap. And if some people took longs here, I don't think it was too bad. I just don't think structure validated it. I think the narrative was fine. Structure didn't validate it, right? I tell you guys to react to price, not to predict it. So if you're reacting and you saw this move higher as displacement, and you want to see a pullback into that fair value gap and then take a long from there, I don't think your narrative and your thinking behind it was bad. I just don't think there's any reason to take a long, because look, once we pull back into this level, we have no structure to validate a long, right? We have no generated liquidity to the left of us. And then we have no manipulation leg to go ahead and displace past that level right there, pull back and then go, right? There's nothing for us to actually There's no structure here, right? This is the complete opposite. If I flip this around, you would see this, right? It looks more like this, lowers into the downside, and then it hires to move to the upside. Dude, that bird's gotta quiet down, bro. Now, so if we're looking at this, right, this is the opposite of what we want to trade. I don't want to be trading this to the upside. So I'm simply watching, right? There's no structure, there's no change of the state, there's no potential opportunity for you to take a long. So I think if you took a long, you should have just reacted to price and not predicted it, right? So why did I take a short here? We see 15-minute value gap get tapped into. That places this low in as another leg of generated liquidity for this bigger time frame model, which has generated liquidity right here, generated liquidity right here, and then zooming out, this model right here. Okay, so look right here. We have this model right here that's in line with this model right here. That's in line with this model right here. That's what you guys gotta get. 3 models inside of each other. That's how I trade, right? And that's why you can get such high win rates, such high accuracy just by reacting, right? It's literally a flawless system. And so what we wait for is that generated liquidity to get placed in. I wait for time and price to align. So look, 1050 opens here. And from there, we kind of see slow grind to the upside. There's no trade presenting itself, but we are in time, right? So when I see a trade setup play out during this time, I'm more likely to have confidence in it and want to take it, right? So I just wait for that displacement to happen. I didn't wait for the value gap to open up here because when I see the market close so strong below that change of the state level, there's no reason, nothing to wait for, right? So I place my entry right here, change the state, stop at the high, and I just go, right? First take profit is right here, so 2.67. And then from there, if we pull out fib retracement, we can get a standard deviation marking in that pulls, I think I did it from, where did I pull it to? Maybe right here, where I could then pull it to, yeah, right here, 3.2. So this was my standard deviation marking, and if you want to go down to the 30-second, I think we could probably refine this, honestly. So let's just look. Standard deviation marking, I mean, that's not bad. It ended up playing out, but I think this is probably the true manipulation. If you want to see, yeah, because look, there's a reaction at -2, so that's where I kind of want to see price go to, and then 3.5 gets hit. So I think what I did was I ended up kind of marking the manipulation leg wrong and just squeezing out a tiny bit more. The best thing to do is mark this out perfectly and then squeeze this to -3.5 for a 4R, and that's a bottom tick. You can say my standard deviation top tick, bottom tick, whatever, but this is just proof that, like, if you do this over a long period of time, we can catch efficient moves like this. So the biggest things I want to stress with this recap is, number one, there's a lot of gold in here. If you want to go through, rewatch it all. I just talked about generated liquidity, market structure, liquidity, all different market maker models, everything that you need to know, right? But to simplify it the most, here's what makes this strategy so great, so high probability, and gives me so much clarity. Number one, we have market maker models, right? We're not viewing the market in trends, right? I'm not looking like uptrend, uptrend, uptrend. I don't know when it'll stop, uptrend, 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 until we hit a point and I wait for a trend reversal, right? Like, no, I don't do that because number one, I have to guess, right? I have to say, okay, we're in an uptrend until we hit maybe a level right here, and then I want to wait for that trend reversal to, like, maybe, like, I'm not sure, I need to wait for it to reverse, and I don't know when it's going to reverse, where it's going to reverse. With the market maker model, the second we start seeing shit like this happen, I can expect, not predict and not take a trade off, but I can expect to see the market tap into that level and then literally mechanically turn around, right? I can expect to see tap in, manipulation, like change of the state, pullback. Mechanically, I can expect it. It's no uptrend until I see a downtrend, right? So that's number one. And then from there, it gives us a perfect draw on liquidity. Where is the liquidity resting in the market maker model, right? I want to take it to that end of that liquidity, right? So we have something like this, right? It gives me a perfect draw on liquidity. I know the liquidity is resting right down here. So that's where I want to take the trade to. It gives me a perfect draw on liquidity. Number three, we have generated liquidity, meaning there is no enemies to our trade setup playing out. And you don't even, a lot of times, and this is not, I wouldn't recommend doing this, but a lot of times you can trade completely without narrative or higher time frame if you literally just look at generated liquidity and displacement. So generated liquidity, like I said, and displacement is the second thing. How do I know that we're gonna go here? Two things. How do I know that, like, right here, the market's gonna turn on right here and then go, right? How do I know to get in this trade here and not maybe take it earlier, like in here and get stopped out, here, get stopped out? Because two things. I wait for the PD array to get tapped, right? And I use a high quality positioning level off of whatever the leg to the left is, whatever kind of stuff like that. Find an area which I expect price to confidently react off of, and then I look to see the reversal there. I look to see it at that point. Number two, I can confirm the reversal. a second layer of confirmation. I don't have to predict and say, I think it's going to react up to this level. I can confirm it when I see my best friend called displacement through a low. Look, we displaced through this low. Where else in this leg did we displace through a low? There is no low that gets displaced through, right? Maybe you see a small wick, a break of structure, a super shallow closure, right? And if this does this, that's not a change of the state. It's a change of the state technically if it closes it, but it's not going to be valid 100% of the time if narrative is not aligned, right? And the way that we can get a great sign if narrative was aligned before the change of state happened is if price displaces through that level. Because when it confidently displaces through, the order book is switching sides, right? Now the bears are in control from the bulls, right? So it's understanding that, right? Displacement and general liquidity. And like I said earlier, this is so powerful. You can take trades literally without high time frame narrative at all, just simply looking at where is the generated liquidity, looking at where is the displacement. Let's go find an example from today, and then we're gonna hop off after this, right? But example from today, you could have said, dude, okay, look, right here. This is a choppy ass run to the upside. Everything is telling you once this point gets hit, there should be no more trades to the upside, nothing more to the upside, right? We should expect nothing more to the upside. Right here, everything is telling you bearish stuff off the charts. We have a sweep, a push lower into fair value gap, right? If you go to a 5-second chart, which is what we're about to go to, you will see a high resistant run to the downside, right? So let's pull this over. Right here, you're gonna see a high resistant run to the downside like we saw here, right? High resistant run. We see all the fair value gaps in this leg get tapped back into, right? Generated liquidity. We sweep the low. We displace past this level. Displace past it. Look, this level right here, change the state. Did we just wick it? Like with this move right here, did we just wick the level and then maybe push a little lower and like do whatever, right? No, we obviously, very obviously displace past that level. We displace past the level. We place our position at that change of the state. Take profit at that high. And then boom, look. Dude, this strategy is mechanical. It's mechanical. Literally generated liquidity and displacement will change everything about the way you trade. A lot of times you don't even need narrative, but if you want to get efficient trades that move quickly, they take profit fast, you get a high win rate, higher R, all that kind of good stuff, you need narrative aligned, right? But literally, dude, look at this. Same exact thing here. Nothing past this point is telling you to be bullish. We see generated liquidity, we see displacement past that level, pullback, entry, boom. That's literally like, this move is what you catch. That is so efficient. And it just shows, this is like, of all the things I've gone through, bounce back and forth through trading, this is the one thing that's stuck. Generated liquidity and displacement will change your trading entirely. So thank you all for listening. I hope you guys can actually get some stuff from this video. I dropped a lot of sauce in this video, so please rewind this shit. If there's something you need to learn, something you don't understand, drop a comment. I'll be the first to explain it. Thank you all for listening. I hope you guys can learn something from this video. Without further ado, I'm gonna let you boys go. So peace out.